Estate Radio Show here on KCAA. This is Patrick Franz, the Note Mentor, your host, and I'm here with Kevin Shortle, the trainer's trainer in the note space. And we were talking about so many different things today. I'm sure the listeners, their heads are blowing up and so on and so forth. And before we start the next segment, they're going to want to know how to get a hold of Kevin Shortle to learn about your coaching and how they might be able to learn more about how to become a note investor. And how would they find you, Kevin?
Yeah, very easy way to do that, email or website. So the email is kevin@kevinshortle.com. I'll spell that for you. It's Kevin at KEVINSHORTLE.com. And the website's the same thing, kevinshortle.com, or you can go to realestateWithoutRenters.com. It'll take you to the same place. And also, if you're interested in the book, you can get that on Amazon using search for my name or for Real Estate Without.
That's right.
With people and help them.
That's right. So kevinshortle.com, SHORTLE, kevinshortle.com, and his book's Real Estate Without Renters, guys. Look it up. He's amazing, and he will help you learn how you can build cash flow by investing in real estate without owning the real estate. But let's talk about why would somebody who has done well for years in the stock market, they've done well being a landlord and being, owning rentals, a rental portfolio. They've done well flipping houses. They've done well. And so they know their game. Why would they want to venture over here into the note world? And why do you think, Kevin, if I were to be so bold to state this, every savvy investor out there should know about mortgage note investing and get into it at some level?
Yeah, I did a video series a couple of years ago where it was a notes versus series, note versus stocks, note versus, I went on and on, rental property and everything else just to compare them. Because again, I am not an anti-real estate. You just have to do notes, forget about real estate. As you've seen, it's really a combination of both of those things that I think ultimately work for people. About one way where you buy real estate and create a note. There's other ways where you started with a note and you ended up with real estate. So there's a flow within all of those. So I think it's important to recognize, because of the safety, which is what all investors want, the return that all investors want, and the cash flow. Where else can you get those three elements to this degree? And I don't know that it exists. If you're investing in the stock market, you don't own you own a portion of the company, but you have no control. Happens with that company. You have things that happen out of every control, and boom, the stock goes down, and so you're running a risk with that. And with this, it's based by hard collateral. And yes, can real estate prices go down? Sure, we saw that. But when we're buying at such a deep level, if properties right now drop 20%, it wouldn't affect their note investor really at all if they purchase things the right way. So we've got the safety that people are looking for that's backed by real assets, real collateral. You've got return that can be really anywhere from 8, 14, 15%. If you're just buying the note. If you look at some of these advanced techniques that I teased you with a little bit, the partials and early payoffs and things like that, those returns, and even I said that the partials, or if you're working with somebody on the back end of the note and you have no money in it, obviously your return is going to be much higher than that. So safety, returns, and then that monthly cash flow. There's some investors that are renting property and they go, yeah, rent. And then they go, okay, but at the end, you had all the costs for the rehab and everything else. In 5 years, you had to put a new roof on and everything else. And they're counting on and hoping for that appreciation of the property years down the road. Certainly that can be a part of your portfolio, but having a steady income stream that's coming in and really putting your money to work. Because by the way, you can do this with IRAs, 401ks, self-directed. I mean, we have so many different avenues we can go down, but it is an allowable investment for all of those items. And it just, when you understand the financial side of the real estate, it just need more opportunities. So I would say it comes down to those three components, which is, what all investors look for.
Yes. Like you said it best. I mean, safety, yield, cash flow to get a safe investment. And guys, again, safety is something that you need to judge, and you need to do due diligence and figure
Sure.
all this out before but it's an investment that is backed by collateral, that collateral being a single family home that you can take back if you're not paid proper, right? The yield that we're able to achieve on some of the medium to high interest rate notes in the Midwest and Southeast by buying them at a discount create a really nice yield when you're comparing the net yield at the end of the day on a rental property and those kinds of investments. I mean, it's right there hand in hand, if not better. And the cash flow, that's the difference, right? When you're looking at your cryptocurrency or you're looking at your stocks, you're watching those all day long and checking the charts to make sure your net worth is getting
Going
bigger.
up, yeah.
But no one is sending you a paycheck on the 3rd of every month in cash,
Right.
where you can go and deploy that, use it to better your lifestyle, God forbid, or compound that and reinvest that into more and more assets. And so you can't get those 3 things all in one spot generally when you're an investor. Truth be
Right.
told. Truth be told.
And again, you can add in the emotional side of that, where not only those 3 aspects, but you're not hassling with all the other more traditional things, driving around looking at properties, having to rehab stuff, I've done all of those things before, landlording, all of those sorts of things. Here, all of this is done through your computer. You can have boots on the ground as needed, and it's so much easier with technology to do this business. For back in the day, going to the courthouses and looking through the microfilm to find somebody who owned or that had a note, so it's a lot different today, much easier to get into this.
Well, Kevin, I know there's people who have listened to this and will listen to this that are going to say, gosh, I don't know if I'm brave enough to call the guy. I don't know if I'm serious enough to call Kevin Shortle. But gosh, he's got this podcast, and maybe I want to subscribe to his podcast so that I can get the juice and hear more from this guy before I get brave enough to reach out. But where can they see you on your podcast or listen to your podcast? And what's it called?
And so, site book and my podcast is called Real Estate Without Renters, and that's on Apple Podcast and wherever podcasts are. It's broadcast, on a wide variety. So you should have no problem finding that. And I also do, I've got a YouTube channel where I do my Note Investor tip of the day. I put that on social media like Twitter and LinkedIn and Facebook, that sort of thing. But I'm easy to talk to. I help people in the industry all the time. And what I usually do, if someone wants to talk, I just send you a calendar, and you schedule a time and phone and see if it's the right in for you. See, there's a way that I can help you within the business as well. And it's very easy.
Yes. I mean, learn, employ, teach is the way it should go, right? I mean, learn something, employ it into your life, and get to be an expert at it, and you can show it to other people. So it's what we do in the note business, folks. If you want to learn, go to kevinshortle.com. How do you spell that, Kevin?
So KevinShortle.com, and that'll come right to me, and I'll be more than happy to get back to you.
KevinShortle.com, folks. And his podcast, once again, I say go sign up and get notified when a new episode of his podcast comes out. It's Real Estate Without Renters. You can find that all over the place, wherever podcasts are listened to. And his book, go get it. Real Estate Without Renters. It must be worth the read, since it's got 4 awards in 4 different categories. Am I right? But Kevin's just a great guy. He's down to help everybody learn about note investing. And for me, I think all of you listeners out there, if you're doing any type of an investment, building any type of an investment portfolio, stocks, cryptocurrencies, rental properties, you got to take a look at these mortgage notes. Kevin's a great guy to learn from. And Kevin, I thank you for being on the show. If you need me to reciprocate and be a guest on your podcast at some point in life, let me know. But other than that, I look forward to doing more business with you. And thank you for being on the radio show here on KCAA today. I really appreciate it.
You bet. Thank you so much for inviting me.
All right, folks, this was the Real Men of Real Estate radio show on KCAA. Patrick Franz, your host, and Kevin Shortle, my guest. We're signing out, but reach out to Kevin and enjoy the rest of your day out there, folks. Bye-bye.